So what is the next move going to be? Is this a mega bull trap, or is it a market reversal and the bull run is back on? It looks like the bull run's back on when you have a look at the crypto bubbles over here. Definitely a lot of green across the board, especially on the altcoins, but there's going to be a lot that we have to look at in order to determine that. This is going to be a purely charting show, so not so much fundamentals today, but straight technical analysis. So let's get straight into it. Looking at Bitcoin on the weekly chart, I'm just focusing on Bitcoin and Ethereum for today. Very quick show. If you enjoy the short form content, please give this video a like, hit the bell notification, and then make sure that you are subscribed to the channel as well. So looking at this, very simply put, you can see that the 21 EMA on the weekly chart has been a very easy tool to use historically, and you can back test it yourself. Price stuck above, angled upwards, good. Price stuck below, angled downwards, bad. Currently, price is stuck below all important EMAs and moving averages, which is below that 21 EMA on the weekly. We stuck below the 200 purple MA and the 255 orange MA. So really actually not looking that good despite the little bit of green across the board. What I've found in my experience is that in these bear markets, you often have these mega bear market rallies, and those are liquidity grabs to take it for big whales to basically take liquidity and get themselves out of the market. So I definitely caution you to be careful. If you are playing the altcoin market to the upside, congratulations and good luck to you, but make sure you have your risk clearly defined and you know what you're dealing with, which is a risky environment. So that is Bitcoin over there. Touching on the DEXI, which has been very important. We have our little lines that we drew in over here. It seems to be still following. Price is pushed, or at least the DEXI has moved through that 111.29, holding above there. Let's see how this plays out over the next couple of weeks. DEXI is macro and long-term very, very bullish. We have the NASDAQ, which has, oh, wow, I didn't even notice that until right now. It eventually hit our support box over here. So maybe, who knows, potential bounce out of this box, maybe a push back into this horizontal dash line over here, dotted line, and then probably comes back down. So there might be something like this and then comes back down after that to make newer lows. Keep a close eye on these lows over here, because oftentimes what you'll find is that, especially in traditional markets, it's all about it's a game of liquidity. So they may be looking to grab that final liquidity, and then you have the next leg up, and that will form the next lower high and then continue to the downside. So basically what I'm saying is that over the next couple of days, you can expect there is going to be some major sort of reaction within this area on the stock market, whether we just nuke straight through that or have a small tiny bounce. I'm not so sure of yet, but one of those two things will happen. Looking at the S&P 500 futures, almost getting into its box, so moving a little bit slower than to the downside than what the NASDAQ is. But as we know, it's just a series of lower highs, and it will be the same thing on the normal S&P 500 over here. So looking to come back down towards those lows and possibly lower, but at a minimum, at least a sweep of those lows. Now, a very important chart, and I did mention to you this to you guys yesterday, is of course that 10-year yield. So the yields were absolutely pumping yesterday, and no surprise that you'll see a slight pullback over here, but it probably is just going to form yet another higher low. And one reason why is you can have a look at that candle that closed as a massive full body candle, meaning that bulls had full control over here. If you are looking this as a bulls versus bears thing, then this candle shows immense strength, and this will just be a slight pullback. It's very, very rare that you see a candle like this followed by a complete engulfing candle on the bearish side. So what I would anticipate is just a small pullback over here, and then the 10-year yields is going to continue on to the upside. And we know that is a headache for the crypto and risk on asset markets. When that is bullish, then pretty much the rest of the markets are bearish. So quickly touching on Bitcoin on the 3-day chart over here, I've marked out a couple of key areas over here. So first and foremost, we are stuck within that very strong downward parallel channel coming to the downside. And I did mention to you that if price does regain this range low over here and hold and close within here, then you could have a push towards the upside. Now, this is the important part of the show where you need to understand where a bull trap would come into play. So maybe for those of you who are new here, you've never heard of the word bull trap. A bull trap simply means that it's an area where everybody gets bullish again, thinking that the market is going back into a bullish momentum trend or towards the upside, and therefore they start to buy at the worst possible time, and then it traps them and price reverses and goes back to the downside. So for those of you new, that is essentially what a bull trap is. A bear trap would be the opposite of that, where everybody thinks the market's going to go down, and then it tends to go up and continue up, leaving them all behind. That's a bear trap. But now we're dealing with a bull trap, and a bull trap would look something like this. Price pushes all the way back up over here towards this region and then turns back down. And all you need to know is you need to mark out your previous area over here. That would be a where the market structure begins to change on a 3-day chart, would be any price that closes above 22,000. Let's mark that off exact. Give me 1 second. Let's just check the high, the exact high. 22,485. So if you see price go above that area, so let's call it, just round it up for the sake of simplicity, 22,500 on a 3-day chart. Any closes above that level means that the market structure is potentially changing, and we can start to look for opportunities to buy the higher lows that would come after that, and that means maybe a bull run's coming back. But until that point, there's just no question about it. This is a strong downtrend, and I would be looking for, if this candle had to push all the way up, let's assume it was today, I would expect some sort of a rejection just under $22,000 on Bitcoin, and then next week things would probably go a bit lower. So on the daily chart over here with our super guppy indicator, this was the drawing that we made yesterday. Similar price levels, just keep these numbers in mind. This one would be at 22,434. That is really the level that you need to clear. This was our previous bull trap that happened, which I did warn you guys of before. So anyone that was buying over there would be completely trapped. And if price had to come back and break above that level, and very importantly, close there. So wicks don't count. It needs to close above that level. Then the market structure begins to change and bulls may be taking back control, but there's no need to chase. You would get some sort of a pullback if that happened. So if this was a bullish move, let's just say, for instance, it went up, close there, you're going to get some sort of a pullback within this region, and then you'll get an entry point, which is still pretty decent. But I'm expecting this over here to be the more likely outcome on that move over there, which would be a trap. What about Ethereum over here? Ethereum has got a lot higher to go in order for its structure to change. Ethereum would need to, any prices that started to close back above $1,780 would mean that the market structure is changing, and then there's an opportunity to go long again on the higher lows. So moving on to this one over here, this is governed all of the downward move really, really nicely, which is the 12 and 24 EMA. As I've mentioned to you guys before, price stuck below, angled down, and it continues onto the downside, breaking all the bear flags down. And where are we at in this right now? So if you have a look at this and I zoom in, there's no need to be getting bullish here, in my opinion. Prices come straight into this line that I drew yesterday, which would form a little bit of an underside resistance. And look, if it breaks above this and starts holding above this line here, and these EMAs have a chance to turn up, then great. But the risk to reward is not really good on short-term trades right now, in my opinion. And that goes for both the up and the downside, because kind of in no man's land, right? Because where do you define your risk over here? So you need to get price again above 22,500-ish level in order for the structure to break on the daily, as I just mentioned. And that would also break that long-term downward diagonal trend line over here, which has governed all of the lower highs since all-time high for Bitcoin. And only then would things start to change. So in my opinion, it's very much a no trade zone right now. The only trade would be if you do get a push up towards this diagonal at about 21,600-ish level. That provides a short opportunity, because now you are closer to that high over there, which means you can define your risk and say, well, you can put your stop loss above there, shorting for much lower. But shorting from here, where you're going to short to, you can short to 16K. But there's no guarantee, right? Then we're looking for new lows. And just from a risk to reward perspective, I don't really see it being worthwhile. What about Bitcoin on the 4-hour chart? So I did mention to you, have this triangle that's forming over here. This might be one more push back into that diagonal resistance over there. 4-hour chart, you need to be clearing 22,800 is the 4-hour close. Once you break above this horizontal box over here, and hold on a closing basis above there, then you start to again change the market structure, and then we start to look for the high lows. So everything at the moment is pointing to me towards a bull trap, but maybe you see something like this. Maybe price pushes all the way up there. That's your shorting opportunity. Stop loss goes above those highs, and then you're targeting much lower. Then it becomes a favorable risk to reward ratio. Ethereum will look quite similar, I believe. Let's see Ethereum over here. So Ethereum, again, same as the daily, you need to get above $1,785 to change this market structure. Otherwise, no point in taking any trades on Ethereum right now. Bitcoin on this 4-hour chart, I did mention this previously, that you can also be viewing this as a range. And there are probably some people that are trading this as a range where you had deviation over there, back into range, deviation back into range, targeting the top. Same thing over here. And now you have this imbalance of liquidity within this area over here. And there may be a possibility that price breaks the yellow trend line and then gets through the horizontal and then targets some of this liquidity over here. But you have to ask yourself, there's so much resistance over here. When you look at the weekly, this is all those important moving averages as well that form within this region. So is it really worth going long here? How do you define your risk? It continues to remain a no trade zone. The best thing to do right now, in my opinion, is absolutely nothing. Just wait. I mean, maybe there's some good setups on the altcoins and you can take those trades. But for now, using kind of like your gambling play money is probably the best thing. I wouldn't be going in heavy with any sort of trades at the moment. With that being said, I also wanted to touch on the one of our sponsors, which is OKX. So shout out to them. They do have a promotion running. I know that over 1,000 of you have already signed up using the link in the description below. And there is a promotion, which I mentioned yesterday. If you trade $1,000 in spot before the end of the month, or you take $10,000 worth of volume on leverage trading, it sounds like a lot, but trust me, it's actually not that hard to do. Then you'll immediately get $50 in Tether deposited straight into your account. So check that out. And there is also a promotion for those of you who are not yet joined. If you do join and you deposit $50 into your account, you get Ethereum or wrapped Ethereum dropped into what's called the mystery box, which you'll find on your app. When you open the mystery box and you shake it, they have like a couple of prizes or surprises there for you. So link is in the description below. Sign up, you get up to $10,000 in crypto. And again, keyword up to. So I don't want you to FOMO in thinking you're getting 10 grand. Probably not going to happen. You get up to $10,000 in rewards. Okay, moving on to the 1-hour chart over here. Bitcoin is still on the 1 hour making a series of lower highs. I kind of have this as an interesting trend line. I'll make it nice and big for you. But I think that price will most likely reject if it even gets this high over here, which would be 19,600. And then any break back underneath the 2017 highs, which I've marked out as $19,187. I base that off of the closing highs. Any break back below that level I would consider a deviation to targeting back towards the downside. So we had a very pivotal point. The next couple of days, this weekend and the weekly close, CME close, all of that is going to provide us with much more information. And then going into next week, we'll see what happens. There is also a bear moon that's coming up in like 2 or 3 days' time. Just for those of you out there wondering with the very dark and gloomy thumbnail, that's the reason why there's a moon in there. There is a bear moon coming up, so we'll see how that plays out. That's in 2 or 3 days' time, but risk continues to remain to the downside. That is pretty much a summary for today. Using the grid strategy, for those of you out there, I did post a video on it yesterday. Well, it's yesterday's stream. It's somewhere in the stream. I mentioned how you can use these grids. You would click normal grid if you're wanting to buy with spot, and then you just set your parameters in there. That is for those of you who want to capitalize capitalize on buying the dip. This is using Bitget. There is also a link below if you don't have an account. If you use my link, you get a sign-up bonus. You lose nothing, and it helps me tremendously. So, guys, that's it for today. Make sure you smash the like button over there, hit the bell notification, and subscribe. And I will see you all on the next video or on the Discord. Stay tuned, and let's see how the day unfolds. Cheers for now.